Hey everybody, it is after market, so we'll do a quick wrap up. And we had a big sell off today. It was just, it never bounced. We got pretty much a straight shot down on the 15-minute chart. One little hiccup here, I thought, for a while that, especially this bull bar right here on the daily three, that we had this 56.46 level. Uh, could have seen a bounce back up and it rolled right over. And we did it on very controlled low volatility. So it was sort of like this drift down, which was so bizarre. Usually for volatility, it's much higher. And so it was, you know, opposite of what you normally see. Let me put the daily up here and you can see it. We had very low volatility um, while it was going up. This one big vol spike was when it tried to come down, right? So this little spike here was when it came down. So, well, actually, this one it went back up, but we did have a big um, bear bar, and I thought for sure here with this bar that it was going to come down, and then it spiked back up. Um, but the overall movement in the market was very slow and controlled, and it it gave us pause to think that okay at 125 it might hold. Well, here was the other 125, the close and the open. And then it hit the 1.5 of the daily range, and that's rare. That's very rare. And it also hit 1.75 of the VIX. But the big play, the trade of the day was this 55.65 um, put wall, the long put for the JHEQX. So our short call is up here at 61.65, and that long put is here. Now there's or I guess is this a short put or a long put? Um, that's a long put. There's a short put even lower, right down here at 4,700, and they do not want that to break. But theoretically, they could, just like the call breaking and maybe moving a little bit and coming back under it once in a while. In December, it just kept going that time, but they absolutely hedge this. So whether it breaks it or continues moving higher at this point, we're way overextended on the quarterly contract and the point level on that basis alone. So if you look here at the quarterly contract, we're at 511.50 points. And if we measure from the quarter high to the low, you can see we're at 603. So we have exceeded our quarterly range, and we have come back inside this quarterly too, which is pretty significant at 55.99, 6,000 on the ES, which is a real strong level, 68% of the quarterly range from the open. That's from the session open. And so you can measure volatility from the open, close, high, and low. So we've got our point range in. It's going to be another week or 2 weeks. So we've got our um, March OPEX on the 21st. That's when our quarterly roll ends. So we've got a quadruple witching. You've got your quarterly roll, your OPEX, your expiration, all right there. So what am I missing? That's 3 out of 4. So I guess triple witching. unless I'm forgetting one of them. Um, but it's going to be a big day. So the prior period, the prior OPEX, remember, we had all that notional, it was like $1 trillion or something expired. So, well, we don't have our quarter end this time. Wait, yeah, the quarterly roll is March 21st. Yeah, but the actual calendar date isn't the 21st. It's the end of the month. So, so it's the quarterly roll, not the end of the month. That's the distinction. So we'll get, a little bit more extra room so that we have extra time to get to the final end of the month period, into the calendar quarter. We're just talking about the futures and options, that options contract. So we'll be rolling our futures contract probably before that. So they'll be repositioning, and people are going to, make a decision whether they're going to continue selling or give it a little bounce. But it's going to be hard for me to envision that they're going to go too much further below 55.65 at this point, since we're already overextended on the quarter. So for that, on the point range, but they could, they absolutely could on the monthly. This 23, 30. Well, we're already past the 30, 37 days also. So no, it's going to be hard for me to believe that they're going to go much further. I kept thinking that this 56.40 was going to hold, and they would not allow them to touch the put wall, because it's been a long time since we've touched a put wall. So, but the market absolutely just zeroed in on it, and they got it. So it's just touch it and bounce. So they got their bounce maybe that they wanted to get behind, so that they could all ride that up. So that would be nice. I'd like to see them ride it all the way up to the call. That would be insane. So, all right, for NQ, I've got a chart loading over here. Hang on, give me 1 second. If I click on something, I'll freeze Ninja Trader. Yeah, I'm frozen. Give me 1 quick second. Well, this may take a while. This is really frozen up. So I will say adieu, a night, good night, and we'll finish the NQ in the morning pre-market video. I'll go over that. But all of the RTY and the LYM also participated in this down move, as well as NDX. So it could, we could start drifting slowly higher. We'll have to see and wait and see how they, keep it real. I'd like to see them get above 56.40 SPX to make me feel better about everything. It's like once they move their risk below it, without a defined hedge in ES, here we came back. I'll just put this over here so I don't break my system. We're already at 1.25 of the monthly range. 1.5 times the monthly range is at 55.41.50. Oh, that's a 4-week range. I have these colors coded, and this might be 1.25. Here's our 1.5. Let me see. These are old. to here we go. There's my 1.5 times the range, 54.23 for that. And then the 4 week at 55.41. So, if they're going to go down to these 1.5 times, then we could get, closer to 5,400. But, um, that would cause them to hedge even more. So they're hedging their clients' money at that point, or not being able to hedge their clients' money. That's what I wasn't really sure, and I wanted to ask, a J.P. Morgan market maker. The client doesn't participate when it leaves outside the range, but for the upside, but are they? I guess, and they are hedged below this, so they're hedged going down. So from 55.65 lower, their clients are hedged, but they're not making money, and they don't like that. They want them, not to. Be in that position where there's no contract value. They're going to have to bounce this up just a little bit. I'll have to. Collars are so different than everything that I'm used to in my simple options world of put call spreads and bear call spreads, or bull or bear call spreads or put spreads. Simple one and twos, but collars are a little bit difficult for me to wrap my head around about the positioning for someone. What is the ramification if it slips below that put wall, because it doesn't happen that often. So I'll have to refresh my recollection of that so I can fill us in the morning, because I would like to know what the deal is. All right, we'll talk to you guys in the morning. Y'all have a good night.